Welcome to the StockMiner.com studios here in the Black Hills of South Dakota. I'm your stock miner, Brian Johnson. Okay, catch-up video, guys. Now, we are and have been working on this long sideways push for quite a while now, coming out of September here, about mid-September. We talked about this in the last video, and you'll notice, guess what? We got more push down into the bottom of this. So the feeling of more bearishness coming in has proved to be correct over the last few days, but notice that we're back down into this lower support area. So here we are. What do we got to work with? When we get into the dailies, you're going to see maybe a little different picture, but on the 60-minute charts, this could end up being just a big sideways consolidation. Go back in time and you'll find quite a number of events here over the last probably 6 months to a year where we wandered sideways for a long period of time. If you follow me at all, you'll notice that I've pointed them out along the way. You know, here's your lower range, here's your upper range. In this case, we have a mid-range. Sometimes we get that, sometimes we don't. Because it's such a wide spread, we do have one in this case. But what you see here is 350, 650. These are your upper and lower limits. The Dow finally made it back to its lower limit. It was actually stronger. The Dow is usually the weaker one, but it has actually been the stronger one up until kind of today, where it played catch up. It kind of caught up to everything. So I call it, I'm going to start calling it catch up day, because there's, in this case there was a lot of red. So we brought ourselves back down into these lower levels. We actually pierced them and broke this lower level. This 350 area here on the Dow, it's a big one. And it does look like there's potentially more downside action yet to come. The bulls are absolutely going to want to hold this as best they can. Now, it's been my contention that we're in an election year, and it's odd to see the markets crash coming into elections. Right? We've only got like 2-3 weeks before we hit the actual elections themselves. We don't have that much more time to use up here. If the bears are going to drag this down, they need to keep doing it. They need to proceed with this thing over the next few days. Otherwise, if the bulls get any kind of a chance, guess what? They're going to bounce this thing, and they'll probably push it up through the end of the month and into and through the elections. That would be my best guess at this point. So let's move on to the dailies. I want to show you what we were looking at. Here was the Dow. It held and held and held the 20-day for the longest time. So the call was below the 20-day and back below this level. Now we broke both of them, both the 20 and this lower level in the last couple days, showing good strength by the bears, finally giving us something to work off of from a shorting aspect. The long has not been easy to play. It's been up a little bit sideways, up a little bit sideways. So it's been difficult to play the indices as a whole. It's nice to see the bears come in. Why? Because they tend to move things and move things quickly. That's great. I don't care if the market goes up or down as long as it's going someplace. It needs to move for me. That's all I'm looking for. It's all I'm asking for. In this case, very, very nicely into this lower level. So what's going to be the theme now in all the markets going forward? 50-day moving average. That'll be your next heavier level here to be watching very closely as we push forward. I go into some greater detail on a lot of this stuff in the newsletters, the subscriber newsletters, but I get more time in those. I do those every day, and not just once a week. So this is just kind of a brief overview, but the 50-day moving averages are what you're looking for here. Right down into this area, breaks below that. Okay, maybe we're on to something here, something a little bit more sinister from the bear's perspective. So what are we looking at? You have breaks back below here, breaks back above here. Those are really your more conservative moves. Now I guess I can move on here to the NASDAQ. This one here was weak, but not as weak today as the Dow. It has been, though, getting crushed the last few days. So the Dow still has some catch up to do, if you will, to where this thing is at. And you'll notice this when we get to the dailies. So here is the levels we were watching, kind of this 2850 and 2770 mark. Once this was broke yesterday, bombs away. Once we got through that 27.7, it was sayonara, and it's been working very nicely here to the downside. Ground its way down a little bit more today, not too bad, only 13 points. But overall sitting in what will be a low base type of a formation. So this is at a very precarious situation as well. If it bounces, it wouldn't surprise me. We are sitting actually on some support down around in this area. Breaks below 27.20 though, I think put that in jeopardy for at least a short-term trade, at least short as well. So something else to be looking at from a short perspective is down below 2720. But this move here on the NASDAQ has played out very, very nicely. Is it done? Is it finishing? Oh, it's really hard to tell. It's way too early to tell at this point too. Still got a couple days left in the week, and I'm very curious about what we're going to see on some of the weekly charts when we get there. Look at this. See this? We had a head and shoulders that we finally broke. Here was the left shoulder, up here's the head, over here's the right shoulder. The target on this thing is way down here in this area. So, I mean, the 200 period moving average could very well come into play now that we broke the 2770 area. Do you see why I was on that area? Yeah, see, it was a neck. It was a neckline of a big head and shoulders pattern. Now, this one I thought, well, maybe if we bounce here, we'll set up another head and shoulders pattern, just a little larger. We're already below it. So it's already starting to pour itself down. Now, I'll give the bulls a day or so to recollect some of this area. But if they don't, if it continues to press down, I really think that this 2675 to 2625 is very, very possible here on this next push down into these lower levels. And the target on this head and shoulders, which it doesn't have to run to right away, but the target on this thing is right down around 2675. So right down around in this area someplace is the target on this head and shoulders from up here, which is about 100 points. So makes good sense that we might see some action stopping the market right down around in here from a NASDAQ perspective. Here are the weeklies. These are the things I'm really, really, really going to be watching. I love what the weeklies are doing right now. We've had this moment here where we've pressed up and pressed up hard. Now, what I don't have on here are some extra lines that I put, as I said in the subscribers video, but this was pounding its head, literally pounding its head against a retest line. This was bearish in the longer term. The bulls could never break that line. They tried and tried and tried for weeks on end and could never get back above that line. Now we got the resolution to it, and that was to the downside. The move down looks very well contained. It looks very structured right now. However, it's starting to creep its way down into this 20-week moving average. So below 2720, you're shooting for 2700, and then 2675-ish. Those are going to be your areas to watch to the downside on the NASDAQ. This thing's been playing along very well, and it was finally time for the bears to take over. If we're going to get a bounce, as I said, I think we're going to see it in the next couple weeks. It's going to need to happen, actually, in the next couple weeks to give us that chance to push things back up into the elections. But for right now, these weeklies are becoming very important. I'm really curious to see if we're going to hold the 20-week by the time Friday hits. Just keep in mind that we've been up, 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 and now we're looking in a very nice, what could be, and it's early to tell, but maybe a bull flag pullback, and that is bullish. Eventually, it does turn around and head back up if that's where we're at. It's too early to tell. I've got to wait till this week closes and maybe even next week closes to really see this pattern for sure. So we'll give it some time. But what you're looking for here is the 20-week moving average. The SPX 60 was also down today. You'll see it doing the same thing the Dow is. Look, 1470 to the high, 1430 to the low. This is still a good opportunity to get into the short side down below this area. With 1445, 1450-ish area being your midline, that was another really good place to get short as well from an aggressive standpoint, but it worked out very nicely. So 1430 back below there, kind of looking for that area. I think it's worth a shot. Does really seem like we've got a bit more downside action to go. I just don't know how far it's going to make it. I really like the support in the 1415 to 1420 area. It could bounce off of that and come all the way back up, maybe hammer out on the daily. Maybe it closes below here for one day and swoops back up the next. I'm still a little unclear on where the direction of that is. But as it is right now, this is nothing but a big flat correction. It's just moving itself sideways here. 1430 and 1470 are your points going forward. Look at the daily. Notice the 20. I was on and on about the 20-day moving averages. Once we broke the 20, we had a very nice push. I was on and on about this bar back here. If you've been following me at all, we had this here is nothing more than a throw over. When we got back below it, my prediction was that we would hold this line, and sure enough we did, and the bears took over. I love what I'm seeing here. Look at this thing here and here and here and here and here. A little bit of a throw over here, but once we got below it, here and here. This is a monster. This is the baby to the upside. So one you need to be watching in your charts if you don't already have it marked. You need to mark it. This thing's cherry and has been for months. It's been working very well for us. Okay, to the downside, look, we're coming in on what? The 50-day moving average, right? So you want to keep your eye on that. Dips back below that, so below 1430, technically back below the 50-day. Something you might want to dip your toe in the water to the short side, and if it continues and it's downwards action, guess what? I'm targeting right down here, bottom of this channel. How pretty is that? We've hit it here and here and here and here and here. Why not hit it back here someplace if in fact we do make it down there? So if we can clear 1420-ish, 1415-ish, very possible to see us into this lower channel line again. VIX daily, look, we're right at on. Now I move this line because I'm going to give the bulls every advantage I can. Today we saw a move above this line, back down into it, close back in it. The VIX confirming, well, in a way, kind of confirming what we've been seeing over the past umpteen weeks, and that is hit the top line, move. Back down, hit the top line, back down, hit the top line, back down again. Here's the part that doesn't make sense, and that is markets were down, VIX was down. That's a divergence. That's not common. Usually markets down, VIX up. We didn't see that today. So bounce coming tomorrow. See what I mean? I mean, we're at lower support. So it's anybody's game. We have some economic data coming out in the morning, but it'll all be released before the market opens. So we might have a pretty good thumb on the market before it opens on where we're going to be. But watch it and watch it carefully. Watch the VIX. Pay attention here. We've been down in these 13 areas, and oh man, what a cherry spot to be going long the VIX down in this area. Just so pretty. But still caught well within complacency ranges of 15 to 20. So we're still looking for breaks. We start to get back above 17 and close above 17. We should see drops in the market at that time. But really, I'm not real concerned until we get out of the 20 mark. However, this channel to the downside, once it's been broken for a few days, that's going to pique my curiosity as to the future of the markets from a bear bull type perspective. The weekly, same thing, pushing up against the 20-week moving average here on the VIX and holding nicely. Point is, we're still in the lower zone of my complacency, and that is, 15, closer to 15 than we are to 20. FAS, FAZ, going to blow through these and give you stuff. Look, we had nothing but choppiness here, back to the upside, back down, but the financials are not hitting these upper lines or these lower lines. They're consolidating in what is a giant triangle. Very clear at this point. So you're still looking for breaks above here and breaks below here for your more conservative entries. Just keep in mind that the financials are consolidating here for a big press up, down. Very hard to tell right now. Could be big news out of Europe or something that moves the financials one way or the other. The point is you're waiting for breaks down around here and back up around here, and it's really just that clear. The daily looks the same way as we rest on the 20-day moving average. A lot of the indices have broke their 20-day moving average. We have not seen that yet from the financials as they wander around in this little triangle thing. So you're still looking for breaks here, breaks up here. Those are going to be your moves, both short and long, for the FAS. Now, the same thing, of course, is happening, obviously, in the FAZ if you prefer this. It's a triangle down here. So we're waiting for breaks up here and breaks down here, with your more conservative being below 16 and above 1875-ish or so. These are going to be your more conservative breaks. But for right now, it's straight sideways. The financials are just hanging on down here. And the same thing on a daily. We're in this channel to the downside, channel/falling wedge, but the point is, back above this 18 should really start to break that open. I actually really like it above the 20-day. So if you guys want to get super aggressive with this trade, I love it above the 20-day moving average, which is sitting right now about the 1740, so 1750-ish range or so. Be tempted to take a stab there, guys. This thing's been pressing and pressing and pressing on it. So if we can get that break, the markets continue to drop, financials go with it, you could see this definitely spring into action. It's aggressive. Keep your stops tight. That's all I'll give you. All right, guys, that does it. That should catch you up. Very strong move by the bears lately. Let's look at the daily. 3 straight down days here, 4 on some of the indices. So market's starting to look maybe a little bit more bearish, but let's remember that the elections are coming and it's hard to get super bearish yet. Don't give in to that type of mentality quite yet. So we've had a few good days down. Yay for the bears. They've still got to prove it to me. Still got to prove it. Let's see what we get by the end of the week. All right, guys. See you in the next video. Bye.